Hi, everyone. Thanks for tuning in today. I'm excited to spend our brief window of time discussing a topic we've heard a lot about and seen a lot of questions around over the past few weeks, which is business interruption in insurance. Anecdotally, over the past few weeks, we've seen businesses affected pretty significantly by coronavirus. Yelp came out with a report about a week and a half ago indicating that 175,000 businesses have been permanently closed down already because of this crisis. Anecdotally, the place I'm sheltered in, which is San Francisco, has seen a lot of businesses hit pretty hard by this crisis as well. I live about 3 blocks away from a shop that's been in the neighborhood for about 29 years and has had to close down because of this crisis. So I think this story and these questions are a pretty global one and certainly a personal one as well. For our schedule today, we're kicking off our discussion with Denise Matthews, who's a Director of Data Coordination and Statistical Analysis over at the NAIC, followed by 5 startup pitches, which I think represent a mixture of solutions that can help folks understand the types of regulations we might expect to see over the coming quarters that might affect the insurance industry, as well as a few solutions that are providing new products, different types of risk sharing and data sharing solutions, as well as companies that are helping the SMB space and helping them leverage new features, especially during these tough times. So Denise, thanks so much for joining us today.
Hello. Hope that you can hear me now.
Yeah, we can hear you well. How are things going?
Things are going well. Yeah. Getting adjusted to our new norm. So going well. Thank you.
Great. So I thought we'd kick it off just by kind of a brief introduction to the NAIC, how you all have been affected by this crisis, how kind of your own workflows have changed as well.
Right. Okay. Well, obviously, I think I heard it said on a webinar a week or two ago that nothing will ever be the same, and maybe it won't. Certainly, COVID-19 has impacted us all of us at the NAIC as well as all of you. Just a couple words about myself. I've been at the NAIC for a number of years, both inside and outside technology. Most recently, the last 4 years, I've been following innovation and technology of the InsurTech space, which is why I've gotten to know you all and work so closely with Plug and Play. So again, thank you for having me. So this is all really devastating, but yet a little exciting for us that have been following along this area for quite a while, because I also heard it said COVID will be the great digital transformer. So we've been following certain things for a long time that maybe have been moving on a slower path than we like, and this may make a lot of change. So, Norjit, I'm going to start by talking a little bit about business interruption insurance, because in our conversations leading up to this, you indicated that this audience, being primarily, I think, P&C carriers, would have a specific interest in that topic. So I'll just start there. So obviously, right away, there was a lot of interest in how much business interruption coverage is out there. Obviously, you talked about small businesses, small, medium-sized businesses being impacted very significantly by this event. And so that was obviously a first place everybody looked. Well, won't come as any surprise to your audience or this audience that business interruption coverage usually comes with exclusions for pandemics. In fact, specifically, it covers pandemic, viral contamination, virus, disease, any words you want to use to describe this particular situation. Most standard policies exclude coverage for it. And this started, back with SARS, 2002, and then it was further enhanced. The language was improved with MERS. And so over the years, most business interruption coverage does not cover pandemic or something of this nature. And again, that won't come as any surprise to this audience. That doesn't mean there isn't still a lot of interest in it. And there have already been regulators, a couple of states, who have sent out data calls to their industries. California is one of them, asking for more information about business interruption coverage. Particularly, it's one of those lines of business, like a number of others, that are clumped into or combined into one line of business for financial reporting. So often, if we need to break that down a little more granularly, it's going to require a data call of the industry. And NAIC tries to step in those types of situations, and particularly with COVID, to try to organize and coordinate all the state insurance departments. I'm sure most of you are familiar with what NAIC is and how insurance regulation is, or that in the US, it is a system of state-based insurance regulation. So to kind of reduce the burden to industry, especially during these trying times, and coordinate the information gathering, we're trying to do some things in that area as well. But there are a few states that have already sent out calls. So the industry, at the trade level, and really some of the stat agents immediately responded with not covered. So, and we're willing to offer up the language that is in the policies, and clearly the NAIC understands and regulators understand what's going on there as well. There are currently, I believe, 8 states who have pending legislation regarding retro coverage for this event. Now, each one of those pieces of legislation have different scenarios and different kinds of ideas of how that would move forward. And I'm sure, again, this audience knows that III and APCIA, trades in this area, they've come out with statements already saying, quote unquote, this would bankrupt the industry. And I'm sure you've all seen the numbers around that, what they're saying about this would be the equivalent of 2 Katrinas a month, that type of information. And certainly the numbers, I'm sure, are based on good assumptions. The NAIC, if you haven't seen it, has published a statement regarding this, and that happened really quickly. Since Congress, immediately started looking at this, and the trades, the industry made sure they were well aware of the exclusions and why that exclusion exists. Because as NAIC's statement says, business interruption policies are generally not designed or priced to provide coverage against communicable diseases. And there are obvious reasons why you can't really spread the risk when it's happening worldwide and happening everywhere. And NAIC's statement goes on to say, insurance works well and remains affordable when a relatively small number of claims are spread across a broader group, and therefore is typically not well suited for a global pandemic of this nature. And I think all of this group would understand too that it's not, the price doesn't consider pandemic coverage. And probably many have heard about Wimbledon or the English Lawn and Tennis Club. Certainly there would be isolated situations where there are commercial policies that were negotiated that did provide this type of coverage, but that's certainly a little bit isolated. And also NAIC regulators are very cognizant of the fact that in order to keep the industry solvent and able to pay claims for other anticipated types of catastrophes, we're in the middle of tornado season right now. I don't know if you've seen what's been happening in the Southeast, and hurricane season is just right around the corner. So certainly need to be sure that we can pay claims there. So talked a little bit long on that, but tried to cover what we're looking at and what's going on in that area. We are doing a data call, and there still is interest in knowing how much premium is written by state, what the policy, how many policies there are. And we have seen numbers on the take-up rates, and we've seen numbers from industry. I think the regulators would like to see that information, themselves. And I think there's a little bit of concern from the industry about whether they can, provide that information without having to kind of go policy by policy to see, is it excluded because pandemic's excluded, or viral disease, that type of thing? Or does the policy say it's a requirement to have physical damage to the property, or, that type of thing also might provide an exclusion. But in the case it was litigated, that might be looked at differently. So it's important to understand what the exclusions are and kind of what's out there. easier said than done.
No, I think that's all helpful. We certainly have heard quite a bit about kind of discipline around policy language, focusing really on the types of language and contracts that were offered to different types of businesses at the time of starting the policies. But I think kind of a big question is also around expectations, right? So I think something we discussed in kind of our preparatory call was the TRIA, and that being kind of a pretty sweeping piece of legislation where legislatively it was decided, even if this wasn't kind of the policy language that folks had been agreeing upon, that was based on how business was being interrupted, this was kind of the type of sweeping change that was necessary for a lot of businesses that were heavily hit. Obviously very difficult to speculate any sort of likelihood or specificity on what the PRIA might mean if it is passed. But just wondering what you sort of make of the times we're in and the times we've previously been in, particularly after 9/11 with the passage of that piece of legislation. Do you see any sort of parallels? And then any sort of internal discussions you've had around what those analogies look like?
Sure. And obviously we've been, heavily involved in and following and paying attention to TRIA, and reauthorization of, and all of the scenarios associated with that, since 9/11. And there are parallels to other areas too. So, just any type of risk that is very hard to cover at a reasonable price. So some of these things could be so, expensive or catastrophic, like a terrorist event, or even an earthquake, that it requires some kind of special consideration. Floods is another example, and obviously, there's the FEMA and the NFIP in that program, where there is something of kind of like a federal backstop, where the private market is involved to a certain extent and to certain levels, and then there are triggers that kick in, the federal government helping with some of that. So it's really way too early to say, and our staff in our DC office, follow that very closely, any kind of federal legislation. And yes, there are already drafts out there, and we're looking at them, but still very early. I think at least the policymakers would have the benefit of being able to look at TRIA and how that works and what works well and what doesn't. It actually works fairly well. And whether or not that would be something that you would put in place for pandemic or something like this. And I just think right now, probably the current issues and dealing with the situation we have is going to get most of the attention. But yes, already looking at that. I think the industry is as well. And if you look at the trades, they're commenting on it and what they like, what they don't like. So yeah.
I think a big focus, as you've kind of discussed, of the broader industry has been trying to understand, what's happening, what the implications are going to be of current policies. But do you also see this environment as an opportunity for new innovation, new products, new partnerships? Certainly a lot of the startups that we'll be pitching today, and more broadly, folks who are active in our ecosystem have asked, what's this mean for our purposes as a startup? What's this mean also for the purposes of innovation that we've been seeing quite a bit of among a lot of our partners and startups in our ecosystem? So wondering, how would you kind of frame the more opportunity aspect of this, if there is, you think, a new set of opportunities that emerge from this?
Well, I definitely think there is. And I said, in my introductory remarks about myself, that I've been following this now for a number of years and love it and very passionate about that. Thank you all for giving me the opportunity to meet your startups and come out to California several times and meet with you all. It's fun and exciting. This is the best job I've ever had. So while again, this is a terrible time, yes, I think the opportunities are are right in front of you. And since I've been working from home and sitting here in front of my computer, you and many other groups that do some of the similar things have been putting on so many great webinars that I've had a great opportunity to sit in and listen to hear what's going on and hear what's going on with startups in this space. And I know this is a PNC group, but clearly, we talk about digitalization and we talk about some of these things that some of the I'll just call them insurtechs. Some are startups, but they're carriers who are also doing innovative and super cool things with these technologies made possible by big data and artificial intelligence and all these other things. A lot of cool things are happening, and they may have been happening a little bit slow. In fact, I heard somebody talking about, I think, some accelerators, some people in this business, VCs are a little I won't say negative about, but reluctant, skeptical about proof of concepts, because sometimes if you don't have the right champion in the company, or you don't have, it's not high enough level, or it doesn't get enough visibility, or it's not on an urgent enough project, it can kind of wane or kind of slow down and maybe never come to fruition and maybe end up being a waste of your time. Where now it might be a really good time to hit, some of those things. Maybe the proof of concept was already in the pipeline, or maybe it was just kind of on the drawing board, but now you may have opportunity where, they realize we want to move this and we want to move it fast. And not only does it give the insurtech and carrier that urgency to get it moving, similar things happen in NAIC. When this all happened to us, we had a system, an application in the pipeline related to doing data calls. And I was a little frustrated because it was going a little slow. And guess what? It's not slow now, and it'll be being used here in the next week. So those types of things, along with just the recognition that you're going to have to, because of distancing, because of remote work, because of what's happening, these types of things are the way you're going to be doing business. And what I would add to that is that if you go out to NAIC's website, there's a COVID block there that you can click on, like everybody else in these times, and you can see everything NAIC is working on in this area. And there's quite a lot. We've issued quite a number of statements and consumer notices, but I think a really powerful thing is our state checklist that we have out there. And there you go, by business type. So you can click on the PNC, you can sort it any way, you can look at it by state, you can look at it by topic. But what it will show you is that regulators have taken all of that into consideration, have moved some timelines, have adjusted some requirements, have adjusted some communication issues, and have made some changes, saying, yes, it will be acceptable for all that to be done with e-signature or online. And so the opportunity is there to maybe adjust your business model, pivot a little bit to respond with the technology that you have to this particular event. And so, yeah, I have seen some really cool things around, I think you guys, I'm not sure exactly which group these startups are with, but I've seen so many cool things, virtual adjusting, the idea of being able to, because it's in the cloud, because it's software as a service, you can go to the company and say, right now, I'll train you, I'll turn you on, you go from field adjusting to desk adjusting in 2 weeks. Cool stuff. Other things around digital insurance brokers, and kind of adjusting. Maybe you were planning to sell insurance coverage, ticket, for event tickets, and you're planning to do that online at point of sale when somebody bought a ticket to event. Well, people aren't buying tickets to events right now, so maybe you implement that technology someplace else where there's an online transaction happening, which are very prevalent right now, and you can kind of adjust a little bit, and then you've got your product out there that responds to this particular event. And then I know this is a PNC audience, but some of the stuff in the life and health area is really cool. Adjusting from, you're doing some screening for cancer, and now you're doing screening for COVID. and you're getting access to ERMs and medical records, and people are a little bit more willing to give up that information, maybe in light of what's going on here. So trying to be mindful of the time, Norjit. What I would say as far as all of that is great time to be able to respond and show what you can do and show that it can work, fine, effective, at a lower cost, and to the delight of the consumer. So what I would say is, though, with great power comes great responsibilities, we say, and what I would say is there has been talk, amongst the regulatory community that, as this speeds up and goes in quickly and we've kind of relaxed and backed off so that that can happen, you don't want to come back when things do come back to whatever the new normal is and find out you have a whole lot of market conduct issues. You've got consumer abuse going on. You got to pay attention to fraud in a big way. Got to pay attention to cybersecurity issues. You still have to pay attention to all those things. And so what I would advise is, don't start getting sloppy about that or not mindful of regulatory concerns, especially in terms of consumer protections, because it'll come back. We know as far as data privacy goes, HIPAA's they've relaxed HIPAA rules, guidelines during this time. And everybody's talking about a tracing app, Google, Apple tracing app, trace all of us, so that we can know who we've been in contact with and who we've been around. Those things beg questions about data privacy and security. And so if we, the best thing to do is, pay attention to that, do it right, and do the right thing, so that later down the road, you've gained all this traction, you've got all this momentum around these things. You don't want to have to back it off, and you don't want to be Facebook sitting in front of Congress. You want to expand from here and show how great this can be and how it can benefit everybody, and how, a lot of us have said this is the great affirmation of what we've been trying to say. This can do it and do well. So I'm running long. So Norjit, anything else?
No, I think that's it. I think there were longer kind of discussions to be had, but appreciate you making the time to share your insights today, and hope we can do it again pretty soon.
All right. Thank you.
Great. So I think kind of in that vein, with kind of discussion we just ended around opportunity and innovation, excited to pass this to my colleague Rachel to introduce the startups we have for today's discussion.
Great. Thanks so much, Norjit, and thanks so much, Denise. Happy to have you always back here again. Welcome back, everybody, to our weekly webinar. We have 5 really exciting startups for you today. Maybe if we can just go over a few housekeeping items, some general rules. Please keep all of your mics muted and cameras off if you are not presenting. Remember that our startups do have space for Q&A after their session, so please use that Q&A, that double bubble kind of button at the bottom of your Zoom screen here, so that we can moderate those questions for you. You can also use the general chat feature to the right of your screen. There'll also be a poll at the end of the startup presentation asking if you would like to connect with that startup, and if there are any remaining questions not answered, we're happy to pass those on. But without any further ado, I want to introduce our first startup. We have Matt with Brighthive. Welcome, Matt.
Hello.
Hello
All
there.
right.
Take it away, sir.
Excellent. I'm going to go ahead and share my screen, and we are ready to go. Okay. Well, it's a pleasure to be able to speak to you all today. I'm Mackie. I'm the co-founder and CEO of Brighthive, and we are a platform for trusted data sharing and governance. I'm hoping in 5 minutes to kind of run through how we are supporting our customers and the larger community around business interruption with data sharing. So I'm going to share a little bit about what we do as a company, and then how we reacted when COVID hit, what we thought about, how we decided to act, and the impacts that it's had on our customers. So a little bit about what we do. Brighthive helps our customers build and manage data trusts. And what those are a way for multiple organizations to share and combine their data. We have the industry-leading data trust management platform, which unifies the business, legal, and technical workflows that you need to create and manage shared data resources across organizations. So another way of thinking about us as a business is that we're a sandwich shop. We help our customers build the BLT of data sharing and governance that we call a Brighthive Data Trust. And to make it concrete for the audience and how it applies in insurance, let's say you have a consortium of insurers who are interested in building a new parameterized contingent business interruption insurance product, maybe at a very niche market for sandwich shops. And the way that this product intends to be parameterized, you need data that really isn't readily available or has tight restrictions around it from supply chain, from IoT, and from HR information systems. We work with that consortium to put together the business, legal, and technical framework, and then they use our platform to manage on an ongoing basis that data trust that allows that product to come to market. And we have customers and partners across enterprise, government, as well as the philanthropic and nonprofit space. And we do a lot of public-private data trusts as well. And with that, you may have actually recently in the news even heard the term data trust come up relatively in new ways. And if not, you probably have at least seen a lot of concern and writing about data sharing. And responsible data sharing right now in the face of this pandemic is more salient than ever before. And so you may be thinking it's a good time to be in the data sharing business, and you're right. We are busier than we've ever been, but we didn't know that back in February when this really hit. I think, like many of you, when this first started to really happen, we asked ourselves, how should we as a business react and support our customers in the face of an unprecedented crisis? And we really set out a few key priorities. First, team health, and then customer and community health, and then having a rapid response strategy to the emergent need that we saw, especially around business interruption. And one of the first things we did is we reached out to every single one of our existing customers and the communities or networks they served to understand what their needs were, to ask them how they were and how could we help. And over the last several weeks, 75% of our current customers have, in response to that request, said, we actually want to adjust the priorities for our data trust to help us better respond to the emergent needs created by the COVID crisis. And in addition to that, we started to see a lot of inbound requests, a dramatic increase in inbound requests for data trusts, where the timeline that they needed them set up was just much faster than our typical process for delivery. In many cases, we had to pull a vaccine miracle where we had to take something that usually takes a long period of time and condense it. So we spent a lot of sleepless nights and for 2 weeks, we're able to figure out how to do some core product innovations to take our core process for data trust deployment and delivery for our customers from several months to just a few days. And with that, we now have Brighthive rapid response data trusts for COVID-19 that are supporting states, enterprise, and entire countries in a variety of really key ways. To give a few examples, in Texas, Brighthive Data Trust is helping connect frontline workers with real-time supports, as was announced by the governor of Texas several weeks ago. We are working with MIT, several key app developers, and the Future Privacy Forum to really provide guide rails around how we balance public health goals and privacy needs as states reopen, especially around contact tracing apps, and helping those states and countries set up data trusts that provide those privacy protections around that application data. And lastly, this week, we have 9 states that are launching their strategies for how they're helping businesses reopen and helping out-of-work Americans get rehired and reskilled, all powered by Brighthive Data Trusts. So that's some of the impact that our adjustment to the crisis has been able to have in the near term. So some takeaways: responsible data sharing matters now more than ever. We worked really hard in the first few weeks of this crisis to do some product innovation to meet that need. And now, as a result, Brighthive Data Trusts are helping both governments and enterprise deal with business interruptions and get back to work. And with that, I'm happy to answer questions and looking forward to chatting with any of you who are interested.
Awesome. Thanks so much, Matt. One quick question. Could you talk a bit more about how data ownership works within the Brighthive Data Trust?
Sure. So each data trust has multiple members who are pooling data in. And any data that they are pulling in is totally owned by them, by that member. But any derived data set that is created by the combination of two or more of member data is actually owned by the trust and managed by the trust's governance committee. And so each of the members have power in the dynamics that the governance committee sets up, and that's how ownership propagates.
Great, awesome. Well, thanks so much. Reminder, if you want to touch base with Matt here in the team, please let us know via the poll or feel free to reach out to any of us here at the Plug and Play team. But thanks so much, Matt.
Great, thanks.
Great, and next up I want to welcome Hayden with FiscalNote. You online, Hayden?
Yes, I am. Thank you, Rachel.
Absolutely, take it over.
And hello, everyone. Hope you're doing well. I am sharing my screen here from DC. Hope everybody's enjoying the day so far. Let me just give this 1 minute to get kicked off. Perfect. So as I mentioned, my name is Hayden Stoltz. I'm a senior account manager here with FiscalNote. So at FiscalNote, as a way of introduction, we build software platforms and provide services which help our clients to discover, monitor, analyze, and manage their legislative and regulatory risks and opportunities. So today, our products and services are aggregating legislative and regulatory data from 18 countries around the world, including the EU, and that's ranging all the way down to the city and county level in the States. Today, we're working with over 5,000 clients across the globe. Those include a few here that you all should recognize, as well as the NAIC. So thank you to Denise as well for sharing your thoughts earlier. So some of the major challenges that we heard from our clients in the legal and government affairs worlds were that they didn't have a single source for information, so they had to spend a lot of time to find the information that they need. And once they did find that information, they didn't have a good system for managing it, for sharing with others, and building institutional knowledge in general. So these have been the driving forces behind the ways that we've developed our products over the years. And today, clients are using FiscalNote to collaborate on issues across teams and to ensure that everyone stays on the same page, especially while we're all working from home. So on that note, collaborative cloud-based systems have really never been more important to efficiency and to workflow. And I just take Zoom as the example of that today. So given the focus of our session, I chose to highlight our domestic regulatory data and just a few quick points here. So our software is automatically aggregating information on every federal and state rulemaking. And we're also generating alerts on relevant updates customized for every client. So that's saving them time so that they can really focus on the higher value work beyond just that discovery. I hear a lot of positive feedback on one piece in particular, which is our public comment analysis, which clients are using to see what their peers are saying, what their competitors are saying about a rule, and just to understand the general sentiment around a given issue. So saving time is crucial almost always in the business world. The reality today is that organizations and many of our clients need to find ways to save money as well. So we offer professional services for our clients who don't have the time to manage all of this information themselves, or who don't have the resources to hire a full-time employee to deal with all of that discovery. And recently, we've seen record levels of activity, specifically from clients using our advocacy tools in relation to that regulatory data. One specific example includes an organization that just prompted over 1,500 people to submit comment letters on a rule change that would expand telehealth services to Medicare beneficiaries during the current crisis. There is really plenty more that I could cover today, but in the interest of time, I'm going to wrap it up there, and I'd be happy to take any questions that you all have. I've included my email here as well for those of you who'd like to learn more. Thank you.
Great, thanks so much, Hayden. Question around any specific initiatives related to COVID-19?
Yeah, absolutely. So we've done a number of different things. And I'd be happy to share this out with the group afterwards. We've set up a coronavirus resource center for clients, which is aggregating international information, federal level in the states and state level. So it's looking at things like case numbers. It's looking at state plans to reopen, really any number of different pieces of information that our clients have asked of us. And then we also are working with individual clients to set them up with specific alerts around COVID-related activity in their specific states of interest and in cities across the country as well.
Great. Awesome. And you also mentioned working with the NAIC and leveraging that. Are you at a place to talk a little bit more about that too?
Not in too much detail, but just in general, the NAIC is using our federal tools to stay up to speed with what Congress is doing and really getting some analysis and context around the policy developments, especially with the stimulus packages coming out over the past few weeks.
Yeah, absolutely. And I guess last question for you, kind of on the same note, question around your work with Microsoft and why they chose to work with FiscalNote.
Yeah, that's a good question. So for Microsoft, as we all know, they build platforms that, serve for workflow purposes. What we've found and why their government affairs team chose to work with us is that there really hasn't been a platform out there that's designed specifically for government affairs work. There are plenty of CRMs out there, but those CRMs don't include all of the data and all of the analysis that we're able to provide that really adds in the color and adds in the context that folks need when they're working with this policy information.
Awesome. And there is actually a last minute one. We do have time. Does your platform provide support for companies operating in Africa and Southeast Asia?
Good question. So really folks around the country around the globe can use our software. The data that we're pulling in really is dependent upon the individual countries. So we're beholden to kind of the data quality coming out of those governments. And I'd be happy if, for whoever asked the question, if you'd like to reach out and ask about specific countries, I'd be more than happy to share the full list there for you.
Awesome. Yeah, and we're happy to help connect you, Hayden. Thanks so much. Really appreciate it. Great stuff.
Thank you. Thanks, everyone.
Great. And next up, I want to welcome Netta with Parametrix. Hi, Netta.
Hi there.
Welcome back. Feel free to take over.
All right, sharing the screen. All right, can everyone see my screen?
Looks good.
Perfect. Hi, everyone. My name is Netta. I'm a co-founder and CTO at Parametrix. And at Parametrix, we specialize in downtime insurance. Third-party service downtime has become the biggest growing risk for businesses today. And what happens today is businesses rely on third-party services like cloud computing as an external service and website hosting as an external service, payment systems, and many more. And when even part of this critical infrastructure goes down, then so does the business. And then you have business interruption. And now with COVID-19, we're seeing the effects of business interruption. We're seeing the physical events, although digital effects are just as bad in today's world. And this problem alone causes businesses to lose over $700 billion due to tech infrastructure downtime And the losses consist of direct revenue loss, heavy recovery expenses, lost employee productivity, intangible costs, and huge SLA liabilities. And that's why Parametrix has created Parametrix downtime insurance. And this is how it works. The coverage is predetermined, we monitor for downtime, and once downtime is detected, we can compensate the customer, and this provides true business continuity. And in order to achieve our parametric nature, we've developed a monitoring system that gathers data and monitors for downtime events for the services we insure. This data is later fed into our database and later used for actuarial models, which are all developed in-house. Unlike other solutions in the market, our technology is based on external monitoring systems. And that allows us to streamline the onboarding process because the customer does not need to install or inject any code onto their systems. It also validates that the customer cannot influence the results, and it allows us to have a parametric nature to our product. We differentiate ourselves by offering an entire bundle of all the mission-critical services that a business relies on. This increases the value for the customer because they can hedge their entire external risk with just one coverage. And our product solves a lot of the existing problems that exist with tech insurance. Most tech insurances today exclude or restrict third-party downtime. In addition, there are extremely expensive claim adjustments with costly forensics accountants and forensics teams, and the claim investigation just takes a lot of time and money. The underwriting process is complicated and expensive, and most importantly, there is an accumulation of risk already under existing policies like tech E&O, liability insurance, or cyber insurance. And the reason for this is that not all service providers have the same risk, and the risk changes even more when we look at each individual region. This is an example of the three major cloud service providers and their regions, and you can see how distributed they are globally. But the data for the differentiation between the service providers and their regions did not exist when calculating the accumulation of risk or the existing policies in the market. But we've gathered this data, we've collected it, and we use it in our actuarial models and in our risk assessment today. And not only is our technology unique, but so are our distribution channels. The broker channel is still relevant because most enterprise insurance is still sold through brokers. But we've had service providers and IT consultants come up to us and want to distribute our policies as warranty or added value to their customers. They speak the tech language much better than most brokers and are great at tech sales. Our key benefits that we can offer the insurer are separated into three categories: marketing, product, and risk management. With marketing, we can meet the current demand for downtime insurance, offer flexibility to address different customer risk profiles, and open up a new market segment, which up until today was uninsured. With our product, we can lower the underwriting and claim adjustment costs and also complement existing portfolios that already have tech insurance and offer an infill policy. With the risk management, we can accurately quantify the risk exposure and manage the risk accumulation because of the predetermined limits that our parametric policy offers. And today we are the Zurich UK ZIC 2020 champions. We are part of Plug and Play and the Lloyd's Lab cohort. We have a finished product that includes technology development, data collection, and actuarial models. And we have completed the policy wording and are launching a pilot soon. Thank you so much for listening.
Great. Thanks, Netta. A few questions. Talk about how you guys are approaching data privacy, if it's a current issue for you.
So a very unique feature of our product is that we have external monitoring, and the fact that we monitor externally means we don't need to inject any type of code that collects data on our customers. So we're actually not liable to that exposure.
Right. And next one here, can you explain more about the parametric trigger?
Yeah, so we have a very robust monitoring system that is continuously monitoring the performance and availability of the services we insure. And we actually know down to the millisecond when there is an outage, where it is, which regions and which services are affected. and we can tie that back to our customers.
Great. And a few kind of around the same note here. What are your ideal customer segments?
Great. So this is a product that is very flexible because of the granularity of the data that we collect, and it can actually suit small businesses and large businesses, corporates as well. If we just adjust the deductible, the waiting period, and the limits of the product, we can actually, have a product that suits very large companies and also a product that suits very small companies as well.
Perfect. Well, great. Thanks so much, Netta.
Thank you.
Great. Let us know if you'd like to touch base with Netta. But next, we're going to hear from Fractal Labs.
Hello, my name is Nick Heller. I'm CEO of Fractal, and we're reinventing financial services for small, medium-sized enterprises. It goes without saying that we're in the worst economic downturn since the Great Depression. And nowhere is this more apparent than with small businesses that make up 50% of the GDP and 75% of the workforce. Small businesses have largely been underserved when it comes to banking and insurance. They're plagued with late and expensive payments, poor service, high interest rates, and are perceived to have high risk. Over 70% of SMEs are underinsured. Ultimately, that results in risk for the business, its people, and ultimately the economy. Now, financial services have evolved with increased demand and digitization, yet insurance still lags other industries. Behavioral science now permeates consumer technology products like Amazon and Netflix, and customers have come to expect this personalized service from all their trusted brands. But why not insurance? Well, thankfully, initiatives such as open banking have increased access to real-time payments data, so we can move from a world of static identity to dynamic identity, which are creating a new era for insurance solutions. That frictionless access to risk scoring data that's historically been missing in SME finance is now finally available through data aggregated from open banking, accounting, open source services and registries, and the Fractal platform provides the building blocks to reinvent financial services using payments, cash flow profiles, and targeting. Ultimately, we power propositions for our customers using our API platform that can be configured for your use case and white label payments products. We empower bank and non-bank brands to unlock the massive latent demand for SME financial services. Fractal tools that are required to build compelling personalized financial services propositions are all underpinned by financial insights. So let's use an example of adaptive insurance cover, and let's focus in on invoices when businesses get paid. So how can we start at this end of the journey around fulfillment and learn about how a business can insure their invoices? Well, ultimately, we use targeting, data intelligence, aggregation, and payments to help drive that insight at the right moment when that business needs to insure that invoice. So fulfillment's powered by a targeting engine. Insights and product recommendations are powered by a targeting engine and a defined set of rules. These rules are built using enhanced data generated through data intelligence. Data intelligence entails automatically generated enhanced data and analytics, which are combined into engagement rules that are configured for our customer strategy. And ultimately, the more data we have, the more we're able to enrich the amount of analytics that we do. So the more inputs, the better. And what we find is that payments generate robust data and also are a gateway to financial services. So we have a white label product called Smart Invoices, which is powered by our payments API. And it provides SMEs with more certainty on their cash flow and an upstream hook for data generation. And these payments help generate a robust user cash flow profile for our customers and are the gateway to financial services such as insurance. So ultimately, we're empowering frictionless access to these financial services. And our objective is to deliver the right product with the right insight to the right SME at the right time. And these personalized products and solutions can unlock entirely new revenue opportunities, 50% new product leads, 60% of alerts drive purchases, and 30% new product sales. So what are some other examples? Well, Deloitte is using smart data-driven tools to power the modern advisor. Their Propel advisory service, which works with small businesses, is using Fractal to power an automated accounting solution, helping clients better manage tax and compliance. Finland's biggest bank, OP Financial, is streamlining the relationship management function. So Fractal's powering a real-time dashboard for RMs, providing in-depth analysis and insights into the core transactional banking data of their clients, so they know which clients to speak to about which products and when. And ultimately, our customers say that our data aggregation and intelligence capabilities are really creating entirely new products for them and fundamentally changing the way that they offer financial services for SMEs. We can work with your developers to configure our solution for your use case, and we offer enterprise-grade service and support. We've been recognized as a leader in the SME financial services industry. We're an authorized payment institution in Europe, and we've been audited numerous times and are ISO certified. Ultimately, we're here to help SMEs and help the economy rebound from this low. Contextual insurance is here. Let's work together to help SMEs make cash flow. Thank you very much.
Great, and we do have Nick on the line. You there, Nick?
Yes, I am. Hi.
Awesome, welcome. A few questions here. How have your partners been using Fractal during the current pandemic?
Well, what we found is that there's clearly a need for working capital finance. Many businesses, we're based in the UK and London, and many businesses are already hitting the wall. Some 300,000 businesses are struggling to make payments, whether that's rent or payroll, because their revenue is completely dried up. So right now, I think there's huge stimulus packages, both in the UK and the US and abroad, where the government is trying to get money in the hands of these businesses to help them over this rough patch. And so we've found that there is an issue around aggregating this core data used for credit analysis and credit risk analysis because of the manual process that a lot of the lenders are using and insurers. And the reality is that in order to make this more frictionless, you need to use the tooling that we provide and that others in the industry provide, where you can get more frictionless access to this data. So we're working with those lenders and insurers to try and get them to be able to deploy capital and understand the risk associated with that more quickly to save these businesses and in turn save the economy.
Right, absolutely. Well, thank you so much. We're actually at time, but happy to connect anybody with Nick and the Fractal team for further questions and inquiries. Thanks so much.
Thank you. Stay safe, everyone.
You as well. And last but not least, we have Jared with Middesk.
Cool. Can you all hear me?
Hearing you well. Welcome.
Thank you. All righty. Yeah, so as you mentioned, hopefully, definitely last, but hopefully not least. My name is Jared. I'm leading partnerships for Middesk. Just before we hop into Middesk, came out of Y Combinator about a year and a half ago. Excel and Sequoia led our seed round. And what we're building is an end-to-end solution for verifying and screening businesses, mostly for compliance purposes. And today, the products we're building are most relevant to financial services companies in those verticals that you're seeing there. But as we all know, every company in the world soon becoming a financial services company. So really, our products are relevant to just about everyone in the future. And when you look into the world of financial services, what we've seen on the consumer side of things is a huge amount of innovation. For example, you can push a button and get a mortgage. And what's interesting about that is in order to make that type of customer experience possible, there had to be innovation on the underlying technologies themselves. So for example, you have to be able to push a button and get a consumer ID and credit check. Now, when you compare that to the world of B2B financial services, where, for example, you might want to push a button and get business insurance. What you have is the situation where the underlying technologies are largely preventing that type of customer experience from becoming a reality. So it begs the question, why is this so hard in the B2B world? And it's because the world of business data is messy. It's incomplete, irrelevant, inaccurate. Anecdotally, I'll just tell a little story here. From the moment Middesk was created, we started checking LexisNexis to see when they would have data on us as a business. It took 10 months, which means in that period of time, if we had gone for a small business loan or an insurance product of some kind, really the only way to verify us as a business would have been to ask us for the documents directly from us, which of course, if you look at it from the financial institution's perspective, creates a lot of problems, right? You have a poor customer onboarding experience, you're doing lots of manual work, lost opportunities in the sense that you might fail a business that's otherwise a good revenue making opportunity, or you might let fraudulent businesses slip through the cracks and increase risk. And of course, all along the way, you're just increasing costs. And so what we're doing at Middesk is we're building KYB infrastructure, know your business infrastructure, to help B2B companies reduce risk and onboard customers faster. And what we believe is that data on businesses should be recent, complete, and relevant. And what that means exactly for us is we get all of our data directly from the source. We spent the last year and a half building data pipelines directly against all 50 states, 52 if you include Puerto Rico and DC. We have a human in the loop model, and this is quite differentiated from other solutions, in the market. What I mean by human in the loop is that we have a certain success criteria as to what a business record should look like, a good business record. And when something violates that success criteria, we actually kick it to an ops team to manually QA the report. What this means for our customers is that they can trust the result we're returning to them, which allows them to automate on top of our data. And then the last thing is we do paint a holistic understanding of a business. So not just primary source data, but also secondary source data, things like Facebook profiles, Google Places, web presence, and so on. And our approach is working. When you compare us to other similar solutions in the space, we've been able to accelerate onboarding, minimize risk, increase efficiency. The one I'll call out is with Middesk, we decreased the business review time, that is during the onboarding process, the amount of time it takes to review a business, by 80% on average. Customers we work with, Vouch Insurance, the company that's providing insurance to startups, Radius Bank, Plaid, Gusto, list goes on, Clearbank, Bluevine, and many others. We're also partners with institutions like Alloy, Treasury Prime, and so on. And so to us, KYB of the future looks something like this. It's instant, it's reliable, so the data is complete, relevant, and recent. It's integrated, so it's an API first approach where you can integrate identity, business identity into your workflows and reliably automate on top of it. And then it's affordable. So at Middesk, we're really working on push button, get a business's identity. I'll shift gears really quickly. I think I have time, just to show you what the product actually looks like. So what you're looking at here is a business record. It's a single pane of glass. You can see all the details about the business. This is all pulling from Secretary of State registration data. You can deep dive into any section of the actual record. For example, you could look at the Secretary of State filings. You could see things like the status, the verified business name, the verified address, the officers, and so on. We run all of the officers as well as the business against OFAC to see if there are any hits on watch lists. We actually pull the web presence of the business and use a machine learning model to classify whether or not they operate in a high-risk industry, just in case you can't do business with a certain type of company. And as I've mentioned, it's API first approach using modern best practices. So in terms of speed and reliability, we do very well. So that's Middesk. Hello?
Sorry, it seems like we lost Rachel there. Jared, you're still there, right?
Yeah, I'm still here.
Awesome. I've got a few questions for you. So, firstly, curious to hear what the formats of the reports. How do you essentially send that to your clients, and how does that integrate into the workflows?
Yeah, absolutely. So it depends on what I just showed there is a dashboard that visualizes everything that's available via the API. Integrating with Middesk is quite simple. So the way it works is you basically create a business record within our system using our API. We pass back a unique identifier for that business. And then we also deliver the payload of all the information that we have on that business. And then if there's any updates, we can use webhooks to actually push the updates directly to you.
Interesting. And I also heard that, I remember, speaking to you before, you guys have been doing a few other initiatives around COVID. Curious to hear, what other kind of use cases you guys have been working on, and whether you could tell us a little bit more about that.
Yeah. We had to shift gears quite a bit. In full transparency, it's been our largest in terms of volume through Middesk, our largest weeks in our history. So basically what happened is the government approved all of the stimulus package for small businesses. Lenders didn't know how to get the money into the hands of small businesses. What ended up happening is lots of lenders actually did not accept new clients if they weren't already banking with them, because they didn't want to go through the KYB process and they didn't want to expose themselves to a huge amount of risk and fraud. And so what ended up happening is tons of small businesses couldn't actually get access to the PPP loans. So we partnered with the banks that were in fact taking new businesses and automated all the KYB requirements for them. Banks like Radius Bank, for example, Evolve Bank, for example, and several others used Middesk to automate the KYB requirements for new businesses who are applying for the PPP loans, so we could get them money faster.
Awesome. Thanks, Jared. It's a great kind of use case, I guess, of startups coming up to help the current crisis. So appreciate everything you guys are doing, and thank you very much for presenting.
Great.
Awesome. I'll hand it back to Rachel. I think we're just going to finish up.
Thanks, Jared, and thanks so much, Nick. Apologies for a little technical snag here. But thanks, everybody. Thanks, Denise and Nurjit, for the great conversation earlier. All of our startups that presented today. These are upcoming events. Please join us. Let us know what you like to see, too. We're still working out the format for some of these weekly webinars, so really curious on your feedback and your thoughts. But from there, I'll give you the rest of your day back. Thanks, everybody.